Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the Russell 2000 index, and this is ticker symbol RUT. And if you're brand new to the market guys, you should know that each and every week I make forecasts and I leave my forecast lines on the chart for the following week so we can see how those projections worked out. And as you can see from the Russell 2000 here, I said that we would move lower to fill this gap right here. Now, if you have any idea about how gaps work, you'll know that 80% of the time gaps fill. And that's exactly what happened right there. And then the second half of that rule is that after a gap fills, like it did here, there's an 80% chance that the price will reverse, and that's exactly what's happened. So what does that mean for next week? Well, if you look at the price action right here, this is a very strong and long green candle, and the oscillators down here, the stochastics and the CCI, are still showing upward momentum. That's part one. So I think that next week we'll probably break into new high territory, and then I think we're going to start to pull back, mainly because if you look down here now, as the market was storming up this week, it left a couple of gaps to the downside. So there's a good chance that the market could actually pull all the way back to this level here and then reverse again. Before the market opened this morning, the jobs report came out, and lo and behold, the unemployment rate dropped to a 50-year low of 3.5%. And the 266,000 new jobs blew away the forecast. So that was obviously positive news for the market, and investors reacted to that. So as the markets continue to go higher, I think it would be a good idea to protect any profits. And if you decide to take any new positions at these highs, I would strongly suggest you use good risk management rules to protect your downside. Now, if we look at the spiders, that's the S&P 500 ETF, ticker symbol SPY. You can see again, I left my lines on the chart from last week's forecast. I said we would go down to fill this gap. We went down all the way to this gap fill support level and then bounced. But just like the Russell 2000, I think we're going to move higher into new high territory, and then we'll have to keep an eye on the volume, because once the volume starts to drop, the buyers start to lose some of that motivation, and we'll see some profit taking. So this gap down here and this gap down here could very well fill, and again, we have to keep an eye on that. Now, opposite to the S&P 500, or inversely related to, is the VIX. And I said that the VIX would most likely drop. There's a gap down here below the market on the VIX, and I think we will continue to move lower on the VIX. Remember, it's inversely related to the S&P, so if I'm still bearish on the VIX, that is bullish for the S&P. So I think we will go down there, fill that gap, and then start to bounce. It's a good idea to keep the VIX on your watch list, because it's giving you more or less a sense of the pulse of the market. And if it's a fear index and fear is dropping, most likely the investors are feeling more confident as we move into the end of the year. Now, if we look at the diamonds, this is very interesting as well. We hit the numbers precisely. I said that we would move lower to fill that gap. Let me zoom in just a little bit more for you. We did fill that gap, and then I said we would bounce. We are bouncing, and just like the other markets, we're gapping up. So I'm going to erase all of these lines to clean this up and make it a little bit clearer for you, and then I'm going to condense my price axis. I think the Dow is going to, again, go into new high territory and then start to pull back, mainly because if you look at this green candle, you'll see the volume is increasing on the way up. That's telling us that the buyers are motivated. Down here, as I magnify that for you with my magnifying glass, that is the CCI. That line is now crossing over the black line, which is the zero line, also known as the momentum line. So a lot of times when the CCI starts rallying, that could increase the motivation of those buyers and push it higher. So I'm bullish next week on the diamonds, and of course we're trailing our stops along the way. Looking at the Qs, which is more or less the tech sector, QQQ, same thing. We had a pullback to fill the gaps. We bounced. It's really the same story over and over again. I'm going to erase all of these lines right here, and then I'm going to draw my forecast. I think the Qs will also break into new territory as we approach this year-end rally, aka the Santa Claus rally, and then I think we'll start to pull back just a little bit. So that's the Qs. Now, each and every week for the past almost 2 months, I've been analyzing OUSA, which is Kevin O'Leary's O shares, and this is a good cross-section of the market. I will tell you that our subscribers are long this in a position that we hold, particularly the option traders, but that shouldn't affect my decision at all, because if you look at the technicals, you can see that we are still moving higher on OUSA, and today we broke out into another high. So I think this momentum will continue. I'm not as bullish on OUSA as I was on the diamonds, because if you look down at the volume bars here, we have a green candle all right, but that volume bar is lower than what it was yesterday. So it tells me the buyers aren't as motivated with OUSA as they were with the general markets, but all the same, I think we're going to go into new high territory there as well. If you'd like to learn more about what we do at The Market Guys, just go to themarketguys.com, click on that video tab right there, and it will bring you to a video library where we have what we call market shots. If you go down here, you'll see that there is a video trading the gap. That'll explain my gap fill rules. You might want to review the 1% rule for managing risk. And as you scroll down, you'll see that there are many other videos that you can learn about and feel comfortable using the technical charts. So that's it for now. Have a great rest of the weekend, and we'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.